When you look at the business of storage, this adds a whole layer of things that you can do, which allows you to create massive returns. The storage facility is the asset of the business. That's the product, right? But you on the side, the business is people. Self-storage gave me all of those components to build what ended up becoming a company worth hundreds of millions. And we will absolutely surpass the $1 billion mark. Welcome everybody to Self-Storage Income. And today we are talking about the business of self-storage. And I'm a little overdressed, but that's because it's a fancy Friday. So there's no reason to have a reason. It's just fancy Friday around here. So people start dressing up and I'm like, you're not leaving me out of fancy Friday.
Yeah.
So I'm bringing it.
Yeah.
I'm bringing it.
Coming in hot, dude. I mean,
right.
You even kind of dressed down a little bit. Like,
Yeah.
I think you had a tie.
I did. For this podcast, I'm like, I don't want this to be too obnoxious. So I dressed down a little.
Yeah. No,
Opened it up. Like, you know.
You gotta rock the chest hair a little bit. Let those puppies free.
Oh yeah. That 80s look.
Yes. Yep.
Need a gold chain.
Exactly. You need the chain, maybe some cool shades.
Yes.
You know.
Yes.
All the good things, a perm here or there.
Perm.
I don't know.
Yes. That'd be an improvement.
Yeah, dude. No, it's funny. Now, yeah, we got fancy Fridays. It's cool. You know, we like doing some of those things. Getting the fancy Friday going on. The flannel Friday. We always have something going on.
Yeah, they
right?
have something. I like the fancy Fridays too, to see how, like, if people, like Chuck wore the cowboy tie today.
Yeah,
that
little bolo thing. Yep. Situation. I went with the polo today.
Yeah, very fancy.
Very fancy.
Very, very fancy.
It's a lot more fancy than my flannel with the rubber ducky tie that I wore a couple weeks ago for Fancy Friday. But anyways, yeah, man, I'm excited to jump in and talk the business side of things, man, because there's so much on the execution of, you know, finding the deal, going in, funding the deal, doing all the just granular things. But, you know, when you have the deal, and especially if you have partners, all those different things, how do you actually run all of those things that you don't see until you're usually like in it?
Yeah.
And there's so much to it.
A lot of times we look at it just on the investment side. You know, you're just looking at, here's a storage facility. We want to understand supply, demand. We want to understand what's it going to generate, the risk, CapEx. You're just diving into that. But a lot of people are trying to be in the business of self-storage, meaning they're not trying to just own a storage facility and just have it make passive income and then maybe sell it later while they're doing other things necessarily. Like, they want to build a self-storage company. And that is different, you know, it really is. But two, this can get very convoluted because also the asset, right, we talk a lot about is a business. I've been talking about that now for 15 years. It was kind of how I think anybody even knew about me in the industry that's what I was speaking of. I was like, hey, you guys think this is a real estate asset. It's not, it's a business. And that's why the first book was turning a real estate asset into a business. And the idea was that you're looking at that asset as an operating company. What are your overall ad spend, right? What are your conversion rates? What is your target customer? And how do you find them, right? What is the lifespan or the total lifetime value of that customer? How are you servicing it? How do you increase your overall cart? Right? Mm-hmm. As we use on like online, as in your checkout and your cart, how do you increase the value of that? What extra products are you selling? On and on and on and on. Not just, are you 100% occupied, 90% occupied, and what are market rates?
Yeah, and right? I have a real estate asset and I'm getting these tax benefits and
exactly
all the things that, are specific to real estate. But I mean, when you're talking about it, and it's funny too, because even I think this is a misconception, even in just real estate investing in general, that's not hit on enough, is the idea that whether you're talking commercial, you're going out buying storage facilities, retail space, you're doing apartment complexes or multifamily, single family homes, whatever, okay, you're going to go out and buy those assets. then how are you going to actually operate and run them? Like, how,
Yeah.
I mean, somebody has an issue at 12 o'clock at night. Who's picking up the phone?
Yeah.
Who's doing the books? Who's doing all the legal? There's so much to it that I really think like the real estate industry just discredits and should recognize more that it doesn't matter. I mean, unless you truly are like a passive investor, just investing in a fund or something, like you are going to have to run a business.
The people that you're working with, that's what it should be looked at. As in, they're running it, so you're investing in that business. And this can get, I like the simplicity of self-storage. I love it, but I do not approach it simply. And I think the difference there to me is really big. My other podcast, the A.J. Osborne podcast, which I just talk about business, right? Like I just did a release on how, when I looked at the overall arching holdings company, the private equity side, where I built the framework for it. Now, once again, think about it this way. If we're going to frame this discussion, we can think about it. The storage facility is the product, the asset within the self-storage business. Okay. So as in the storage facility itself, the product is the unit. In the business of storage, the product or that thing is the storage facility itself, right? Then you grow and you build and you buy storage facilities, you build a portfolio, but there's a different strategy that the business has, obviously, than on site. And when I was looking, storage became the vehicle that I wanted to do within a certain type of business structure. And the reason why I picked storage was due to a few reasons, right? But it was really modeled off of Warren Buffett and what I viewed as his secret to success, which is kind of known, but not known really how it works or functions. People say, oh, he's a great stock picker. Then people say, no, he buys businesses. He buys businesses, though, that are on sale or what is theoretically below their intrinsic value, and then getting them at a discount, right? Go up. And then people keep going with that, and they may say this. Well, it's actually much deeper than that, because at the end of the day, his performance is very different from other people that do the same thing. As in, if that was simply it, what he does, every single person could copy and do. Not every single person, but every company, investment company, everything else. They could literally just copy. In fact, you could copy almost the exact moves at disclosures. But there's a whole sub foundation that creates his ability to generate outsized returns in comparison to all of his competitors for so long. And that very few people understand, and how it is incorporated with things like float from insurance companies, right? And so what I did a long time ago when I was in college, I was really into business since I was a kid, thanks to my dad. And when I was in college, I'd already spent years reading books like, Stephen Covey and all that stuff. But I picked up 21, right around there, The Warren Buffett Way, and it blew my mind, right? And so I tried to emulate a lot of it, copy. It didn't work. And so over the years, I started trying to figure out why and what was going on. And I basically built this formula. Like, there was a handful of things that he's doing, which a lot of people, part of that, half that formula, literally 50%, a lot of people don't understand. The only reason I think I got it, though, was because I was specifically in an industry that he used. So I understood that stuff, and that was the only reason.
And that was insurance.
Right? Yeah. And understanding some of the tax, investment, different things of that he used as a vehicle. The only reason I'm talking about this, you want to hear more about that, go to that podcast, because I break it all down. In fact, I have charts where competitors, I look at the float, how much of Warren Buffett's overall portfolio was driven from these different aspects. But I wanted to be able to recreate that secret sauce. So all I did was say, okay, what are the themes of, like, what are those drivers? And then what can we create? And at the end of the day, the simplistic version is there's a few things. First of all, you have underperforming intrinsic, right, value versus extrinsic, which I talk a lot about that. That's one of the reasons. That's one of my 4 pillars. You have the undervalue. We have leverage. You have tax savings. And then you have compounding, which simply means you can return that capital. You have a machine that allows you to return capital and generate returns on that capital without losing the original source. You get a return on your money. These four became the four main pillars to creating an empire. That was the strategy for my business. That was the formula that I needed to emulate what Warren Buffett and what a lot of other greats had done. He could do it in a way I couldn't, right? He gets his leverage for free, things like that, which go there. I'll talk about that. But with this, self-storage gave me all of those components to build what ended up becoming a company worth hundreds of millions. And we will absolutely surpass the $1 billion mark. I actually tried to do something very similar in the insurance space where I was doing roll-up models, right? And the main thing that killed us was leverage due to access, cost, different things, how it worked, value creation. But the taxes were the biggest problem because we were taxed so high. And I felt like I was running on this treadmill where I'm like, I can't. If you could eliminate two of those four things, the problem with it, you already will outperform so high. Think about it in its simplest terms. In order for you have an investment dollar. You invest in a stock. First of all, you are only investing 65 cents of what you actually made. What you actually got was 65 cents of the original dollar because you already lost it due to taxes, everything else like that. So how I looked at it was what I had to do to make a 20% return. Actually 20% on the dollar, I first had to make up what was lost because that was actually what I made off my efforts. Then I had to make 20% on top of that. And I'm like, this can't work. This is one of the main problems that has to do with that compounding. And so when you look at the storage as a business or an investment, just right, alone, that's amazing. When you look at the business of storage, this adds a whole layer of things that you can do, which allows you to create massive returns. Technology is the name of the game, and how you operate your facility and the efficiency at which you can operate will depend on the technology you use. Your property management system, what it allows you to do, and what you have access will determine the outcome of how that facility performs. That's why we go with Tenant Inc. with their product Hummingbird, because they are the best in class. When dealing with automation, when dealing with move-ins, customer acquisition process, improving my online acquisition process, they are bar none the best. So if you are looking to automate your facility or operate it in a best-in-class way, make sure you guys are looking at Tenant Inc. and their product Hummingbird. The link is in the description. And this was essentially what we were trying to do, especially with Cedar Creek, to emulate that so other people could do it. But it followed these four components. So we're making this division, everybody, in what we're talking about. The storage facility itself, in the business of storage, that is the product or service of that business, the actual facility asset, okay? Where the storage business, the actual product and service is the unit. Hopefully we all understand the distinction. Past that line, that's what we're talking about. For us, it's easier for me and Connor because the business of storage is where we're at. There's an actual physical distinction, right? Like we have our corporate offices here with all our employees and everything. And then if you go down, the road or to one of the states with one of our storage facilities, then you have the storage facility business there. So it's a very visual distinction for us.
Yep.
Right? It makes sense. Here, we're in the business of storage. When you go to our storage site, it is a storage business. That makes sense.
It totally does. And that's a lot of, really what we wanted to touch on today is what those pillars actually look like. Not only, I think that's a really good insight from you as far as how you recognized what Warren Buffett was doing, the pillars that he was utilizing to just so consistently over time succeed and do really well.
Which, don't mean to interrupt real quick, I do have a breakdown.
Yeah.
Everybody go in my newsletter. So I have a whole 4-page thing written out that actually shows the charts, everything. just so, look, we're just giving it obviously to people. That's what we do here. So
Yeah.
you can go check it out though, but go to the newsletter. That way you actually have and can see what we're talking about. Sorry.
No, exactly. No, you're good. But talking about those pillars that you'd recognize that are valuable and recognizing, so you talked, obviously we all kind of understand like the intrinsic value, going in, value add, all of that. That's like the outcome, right? You have like the inputs and then you have the outputs. The input is like going in and doing these business activities. The output is the actual increase in value, bringing that facility, that property up to the actual value that it can achieve. But talking on leverage, tax savings, and then the compounding piece, how did you even start going about actually building those things into a business?
So there's a few things and this can be really hard because at the end of the day, lots of times you have to realize that business part of storage is simply a loss. As in, a lot of this is administrative functionality and everything. We don't generate, and we didn't generate income. Now, of course, on the private equity side, we do generate income because we have to, or it doesn't work.
So you're saying
fees.
Like the admin is like, it's costing you money to do it's operational expense.
Yes.
To go and to have the business doing this stuff. So it's not generating revenue.
It's not generating revenue. So if I have my own money and I go buy a storage facility, there's all these activities that we have to do here to buy that facility. You have to underwrite it. You have to work with brokers. You need to pay for studies to be done. You have to work with banks and all of this work, right? And then you buy the storage facility. Well, then you get that storage facility. That's what you get, right? And then it makes money, but that money is being made off the money you spent on the storage facility. Well, you don't include all that stuff in your return, even though it actually costs you money to go and get it. So all of a sudden, if I spent, $100,000 on a storage facility and it made $10,000 a year, I'm getting a 10% return. But then what about all the work and effort and everything that it took you and cost you to actually get the facility, right? Now, that on a small scale may not seem like a lot. On a much bigger scale, it's huge. And it's very, very costly. Millions of dollars a year is what it cost us to just run the business of storage. Now, as we were growing, the assets that we had were producing so much that it paid for our business of storage. This was before we had investors, but we always had to add. We had to be buying to add more revenue in, right? To go. Now, the way most people do it is the business of storage is actually more like private equity, which we have. That then pays for like an acquisition fee. And then you also get paid things like property management fees, which you have to because the ownership, because you only have a portion of it, would never pay for those activities. So you literally couldn't do them. Like people are like, well, why do you charge fees when you're doing? Because if you don't, you're going to go bankrupt.
Yeah,
there's no money.
Somebody has to pay for that.
Yes.
And I think that's a really important thing, not only from like an investor side, but from an owner operator side. I mean, from every angle that you look at it, I think it's really important to say and talk about those things. If you're looking at an OM and you're seeing like these really low fees and it looks really attractive and all these things, it's probably a red flag.
Yeah. I was actually talking with the guy and he was like, well, I don't want to charge fees. My fee is in the ownership. Like, okay, that's great. If I'm an investor though, and I'm investing in you and we have a bad market cycle like we did over the last 2 years and rates went down and now you're making $10,000 off your percentage of ownership of that income a year. Why in the world are you going to be working full time? And how do you pay for other people to work to actually make sure that asset's successful?
You're not.
You can't. Yeah. You can't. You literally don't have the money to. So are you now going to go get another job to pay for the ability for our asset to make money? What that looks like to me is you don't know what you're doing, so you don't know how to include the cost and expense of it. That is such a red flag because then what they'll do is say, we don't have money, we need to pay for it, so now it comes out of the facility. And you're like, well, yeah, but that's where you didn't calculate that. So now all return metrics, everything is totally off because you acted like that facility didn't have expenses that it actually had.
Exactly.
There were real expenses there. And because you didn't act like it was there, but then afterwards when it needs to be paid, you got to pay it, everything tanks. like, I don't even know if the facility could have handled it, meaning you vastly overpaid for that asset because you treated it like you didn't need to get paid and there was expenses that you paid. That's why that's such a red flag. What you're getting is a vastly overvalued asset or a return model or something like that that doesn't exist because that person that's doing the business of storage, who's doing it without fees, is saying, I'm going to work for free and everything. But then when that can't happen, when none of that can actually work out, or those real expenses come, you didn't underwrite for it. So instead, you build in the underwriting to get the return with those expenses. That's how it should be done. That's how every actual investment company does it. The reason why that's important to know that everybody does it that way, because if you go to sell it and you're saying these expenses don't exist, we don't care. When we go buy a facility, everybody inputs their own expenses, not yours. And this kills people because then they go to resell it and they're like, my profit's 100,000. Net profit's 100,000. And I want 100,000 at a 5 cap. And everybody looking at it's going, no, it only makes 80,000. And you get 80,000 on a 5 cap. And you're like, that's $500,000 less or whatever that number is. And they go, well, we don't care. Just because you say those expenses don't exist doesn't mean they're not there. We see this all the time. We see this in the local level where we will get people that will bring their storage facility, their expense load is 15%. When you go, but you have no payroll in here. Right. You literally say nobody's actually running the asset. You have no property management fee.
Yeah.
And they go, well, I'm doing it. And I go, great. Are you going to work for me for free? Well, no. Well, then what are you talking about then?
Yeah.
Like you're just because you think that your labor doesn't cost anything and you'll do it for free, unless I have that opportunity, it doesn't make $100,000. That's why that's a red flag when I see that and when I hear that. It's not because they're good or anything else like that, or even it's because you are artificially manipulating the returns by doing things or paying for things outside that actually have to be done and paid for by the asset. It is not a way that not only can you not do the correct underwriting for it, but also have a business that's sustainable. What happens when things go wrong? Because things will go wrong. They will. I guarantee it. What happens when all of a sudden that person has to pay and they're not making money, everything else? Guess what they do? They sell it. Even if it's at a loss. Because they go, I can't do this. I can't afford it. I can't pay it. And I didn't build in a mechanism for me to have a fee to get paid. The investors lose big time in those situations. And it's very, very dangerous. That's why when you say the business of storage, it's really important to know and understand. How is it happening? How is it getting paid for? And what does it mean? So we have in the syndication models or private equity models, all that, they have certain types of fees like administration, asset management fee, right? Which includes everything from investor communications, reporting, filing, like a whole bunch of stuff. And then you also have property management fees. Those fees can get skewed. While people race to buy assets or they're trying to buy assets and they're trying to be competitive, they undervalue them, but in reality, they're higher. And then you're not getting what you thought you got. It's a very, very dangerous thing to be playing in. There's people that want to start the storage of business and they don't know how to properly allocate that capital or fees. Generally speaking, the things that go into doing the business of storage, right, is finding, underwriting, getting money that is for a bank or from investors. Then you have to communicate with the bank and investors. So that means you have to do reporting, you have to do analyzing, right? Then you have all sorts of other things like vendors, third-party people that you have to organize, that you have to actually do the execution of. Even if you have a third-party management company, who is working with that third-party management company?
You have to know what they're doing.
Exactly. They don't just, it's not like you walk away and then go away. No, they don't know what to do. We have Jody. I don't know if you saw that. Jody, she's a member of our community inner circle. She left her third-party management and she went to do it on her own. And she increased the revenue by like 25%. It was crazy.
Yeah, no, that's pretty amazing.
You know, when you look at this,
great example.
and it's not even that you have to take it over, but what that shows you though is you just can't pay somebody and they just do everything, and you don't need to know, because that's not even their fault. It has nothing to do with the third-party manager. Every third-party management company that I know, they want a owner that understands what's going on. There's nothing worse than if you're a third-party management company to have an owner that doesn't know what's going on, and then they get mad about things, and you're like, well, you didn't tell us. We can't do what we don't know. They're not mind readers, so they're going to do what needs to be done and what's best. When you find out, you're like, well, why'd you do a reset seal? I wanted to give our investors more money. Well, it needed to be done, and you told us just to do whatever. It's not their fault that you're not engaged, that you don't know what's going on. You create the business plan. You work with that third-party management company. What are we trying to achieve here? Occupancy, rents, these things aren't light switches. They happen over time. So like you need to work with them, and they're there to execute, but it doesn't mean you can be hands off. So the business of storage still exists even with a third-party management company. Then you have all sorts of other things where you need to look at, do we sell? Do we refinance? How are we using capital, tax advantages? You have the actual taxes that have to go out and what you're producing for your investors. There's all of these things and more that are involved right in that business of storage. On one, that may be able to be done by one person acting as asset management, acting as that person that's doing it all, coordinating, because they have lots of help with third parties. I have an accounting firm. Maybe I even have a good software company, but then I'm taking in information and I'm going to do it all the work myself, reporting, everything else. That's fine. But to grow outside one, that gets complicated really, really quickly. And one person can't do it without making mistakes. So now you need to hire people. So why don't you talk a little bit about our departments? So within the business of storage, as we've grown, we've segmented these functionalities into departments. Are you a new self-storage investor and want to know what that facility is worth, what the risk is, how to underwrite it? Well, that's exactly what we do in a feasibility study. A feasibility study, we actually look at the market for you. We look at the finances, the underwriting, we show you where the upside is, the downside, and all the risk. That is actually what you can provide to banks to get capital and investors. It's a big worksheet, which most banks actually require. So if you want to know what a storage facility is worth that you're looking at, come to us, follow the link in the show notes, and we will tell you.
Another huge focus of ours is getting really, truly the best people in those roles. I can't say enough about just investing in quality talent. Because like you said, when you first start, it's more simple to have, a number of people wearing 12 different hats, or even yourself wearing 12 different hats. That works for a while. But like, as you said, as you start to scale, things aren't getting done to the level and the degree that they should.
And this happened to us. It's a problem. We grew so fast.
From experience.
we grew, we're talking like 100 million plus a year in assets under management. And we were growing even more, raising, and we were doing all of it, everything. We weren't going, we're working with somebody that's raising money and somebody that's doing property everything, even the debt we were doing on our own, the architecture,
the development, the architecture,
all of it,
every piece,
everything. And so we were buying hundreds of millions and we were also developing, and we grew too fast. One of the also things that hurt us at the time is we didn't have access to high level people. This was right after COVID and frankly before, but unemployment was like nothing and self-storage was booming. So people in our industry, not only were they paid so high, but we didn't even have access to it. So it's all of a sudden, as you're growing, you don't have time to find, you need the help, you need the work. And that hurt us. It did. It hurt us. It hurt us on our output. It hurt us on, you start seeing all these balls that are being dropped and you don't even know they're, because that one person is wearing 12 hats and that worked when you had 2 facilities.
Exactly.
But then 12 hats with 5 facilities is like that one person is working 5 full-time jobs. And so every single position needs 2-3 more positions. Every department now needs higher level people because now you need management. And it was all happening at once, right? So this was something we learned really firsthand. And it can't be overstated. Hindsight's 2020, of course. If we look back, understanding those different roles and how they would have played out and built out within that part of our business, we should have been like, okay, let's hire out these and then let's grow, because we didn't understand the impact of that growth. It happened.
Yeah,
we had to fix it. We had to go back right. It does. Every company will deal with either growing too slow, growing too fast at times.
Yeah.
But that's how you figure out the roles, is literally by one person's doing it. Now I can't do all of it. Well, then you have to prioritize which one of that functionalities is more important, which one impacts areas that we don't know.
Or what's the biggest issue that we keep seeing happen
Over and over again.
Yeah, that was kind of a guiding light for us, is just seeing, what issues were happening, what balls were being dropped. It's like, okay, that needs to be taken care of by a subject matter expert here. Let's find that person. You got to find those killers in those roles and put them in those roles, I should say, and invest in that, because I think we can get caught up a lot of times going again, back to the business. Like, what's the P&L say? Obviously, we've got to look at the financials, what we can actually do. But all said and done, can we reallocate to investing in this just incredible revenue management person, or this incredible operations person, or whatever?
Which will pay off, but not in that moment.
Yes.
And so that becomes the problem. It's a net negative on cash flow. And you're like, it'll pay off, but it may take, the company has to grow. They're there to grow the company. It's not like you just bought another asset. It's not like you did something at a facility. It's just the cash flow's gone.
Right. But like you're saying, man, over that time, I mean, you look at the cost, right, as a entrepreneur, business owner, but you have to also look at, just like you're looking at the asset, that return on investment. What is that
huge?
Couple $100,000 a year employee going to actually provide in value to the company during their tenure? Like,
Which is tremendous.
It's far and above, and I've seen example after example of people who are doing this in their businesses, and their businesses just absolutely explode, because not only the biggest thing too, one of the things, and people don't like this, but it's the truth, man. It truly is who you know. It really, truly is.
Yeah,
and
absolutely.
When you find, and again, you've got to pair that with skill and execution, as always. Like, let's not get crazy. But the thing that comes along with that is, you find those individuals that have the 10, 20 years experience doing that. How many freaking connections do those people have in that industry doing that thing? How much access do they have to all those other killers out there that are in their respective areas that you can then also bring onto your team at some point in time? I mean, the value creation and finding incredible people and getting them on your team, absolutely huge. Probably one of the most important things
in our business.
Man, I think people overlook.
What Connor is talking about, this separation, you guys, and remember, the storage facility is the asset of the business. That's the product, right? But you on this side, the business is people. It is. So your investment on this side is in people. All of the business of self-storage, you are investing in people. That's what you get out of it. We're syndicating, we're buying assets, yes, but that's not what we're talking about. The business itself, you're investing in people. I think that's true with every single company, obviously, but a lot of other companies and industries, you can look at it very differently. Is, well, if we actually got new machinery that it could produce at a higher level, we actually need less. That's not how this works.
Man, it really makes me think of really defining. It's kind of like that example that I think a lot of people know, where the whole McDonald's story, where it's like, yeah, you're not in the restaurant business, you're in the real estate business. Like, really finding that core competency of what it is that you're doing. So that was a perfect way to say it. Like, the facility's core competency is, occupancy, revenue, like getting customers in the door, buying products, storage units, quote unquote, and maintaining those customers. Whereas the core competency of
the business of
storage is people. Again, people, organization, structure, management, like
processes, on and on and on. It absolutely is. And the difference is, one, we are more of a real estate type business. It's local. The storage facility, we have products, we're doing sales, right? All that. Where the other one, you are an investment company. Whether you have investors or not, you are an investment company. So you are looking at knowledge-based resources. How do we take advantage of markets? What do we see coming? What are the things that need to be done in the facilities on the ground? But it's all knowledge based. The execution happens at the facility. Okay. And the people in the storage of business, they are the ones that are managing resources, as in you manage the people, and we're also talking property management because we also do that. Some people have third-party management. Then it's just asset management, which is even more so. All you have is the value is the people, right? But even in the property management, you're managing people, you're managing technology, right? You're managing data, numbers, risk. You're managing debt, you're managing investors, you're managing, right? It's all knowledge based, right? That's what this kind of is. So the value of those people will determine how good not only how well they know that item or that thing, but the people they know and how good they are at working with other people. I've seen some companies that had a lot of smart people, but the people didn't work and couldn't work together. And I've had this and it doesn't work. So then you're like, the independent person not being able to integrate, right, is worse if you had a less qualified person that could integrate, 100%. Right? But you also have to look at the capacity of those people in line with how well you're growing or what you're going to do with the company and how much you're going to grow the company, because the company can outgrow the skill sets of the people. In fact, it should. That's kind of the need and purpose.
For sure.
But then it requires you to think about different problems and people, and the quality of those people rise, the cost of those people also rise.
Well, it makes it a lot easier to have those conversations too if you already have that plan in place and you know where you're going and what you're doing. Because, again, going back to people management, if you've got people that have been with you for a long time or whatever that is, maybe they just have this expectation that they're going to be the CEO for the rest of forever because they just have been with the company, quote unquote, forever. And it's like, well, no, at some point we're going to bring this person in. They're going to come in and the team and the people should be excited about those things.
Yes.
And if they're not, again, you probably have the wrong people.
Yeah.
Like they need to be excited about moving themselves and the company forward, because I go back to kind of our roots of impact, freedom, and progress.
Yes.
Back in the day, and creating those things for everybody. And the way to do that is obviously together. The success doesn't happen on an island.
Yep.
You've got to do it as a team, and you've got to make sure that those teams can leave those egos at the door, the self-serving, agendas and whatever else you want to call it at the door. Like that's not a possibility. So the people management thing is huge. I'm glad we actually brought that up, because that's something that is super important to any organization.
And the higher level the people, the harder they are to manage.
No doubt.
You think that you get more qualified people that have more experience and they are easier to manage. That is not what I have found at all. And I mean that coming from even on the benefits consulting side, right, where we were managing $800 million plus in premium, and we were working with C-suites of, hundreds of companies, including having high level people that were doing everything from, because we did self-funding, claims analysis, right? The higher level those people are, it actually can be much harder because they are driven. They are smart. They have the idea of what they want to do. And this comes into my 3 stages of leadership that I talk about for entrepreneurs, right? There's 3 different levels. At that higher level, just because you think something should be done doesn't mean it should be done that way based upon the people and what their abilities are, on and on and on. So you actually have to let people do things differently, even though you think your way may be better. It actually may not, because of the ability of the people that are doing it and executing. But then you have different departments and high skill. They all have to coordinate and work together, even though some of them may want to do things very differently and believe full-heartedly. And then instead they argue instead of collaborate, and each person gives to make a better fit. And then it works better than they could have independently. But that can be hard with high level people. They want to run the show. That's understandable. That's how it works. So when you manage people, especially at that level, it's a different type of game. And you can get those types of people and they can ruin a business. And, that was something actually my dad talked to me. He's like, a bad person is like cancer. It infects everything else
100%.
and it spreads. And so you need to be careful, because even though their skill set may be great, even though they may be great, they can infect the host. And so having good, driven, qualified, high-paid people as you're growing an organization, their impact is much larger. It's on the employees on the whole, good or bad.
Yep.
And as a leader, you have to be able to work with everyone, but you also have to be able to manage and allow people to bring things to the table, but also tell them you got to pull back. I'm not wrong. Doesn't matter. It's not what we're doing here, right?
Yep.
And this people management part, it is really, really tough, especially the higher level you get, right? And as a leader, you want smarter people around you. It's the whole point. If you're going to be the CEO of the company, you want smarter people around you that go, you're better at this thing. You cannot be the best at everything, right? You can't. If you are running a horrible organization.
Yeah.
And those people should absolutely disagree with you. If not, you don't have people of value, right? It just is what it is. And so a lot of people can have a hard time with that, right? Because I can have a hard time with that. I think everybody does. I think you're lying if you think that that's not true. If you're the leader of a company, especially if you're the owner of the company, because you always can just drop the, nope, I don't care. I'm owner. I'm the leader. I'm the management, right? You don't need to listen to people. You don't need to say no. And a good leader will do that, will say no, will allow failure, even though it's managed failure, but will allow people to grow, but they'll also allow things to be done not in the way that they would want it to be done, even though they don't have to.
Yeah, it's the what, not the how, right? Like letting people do what needs to be done, but not like micromanaging the how exactly it gets done piece. Super important. And kind of circling back, you'd asked me, I'd gone down the rabbit hole a little bit, but you'd asked, those departments and what we built out. Obviously, we've got legal, super, super important.
Yep.
We built out HR, super, super important. Again, this is all the back end stuff. You've got the accounting, very, very important. Accounting, finance. That's one of the biggest ones. I mean, you can be audited any point in time.
Yes.
Like you don't have your stuff together, super, super pain in the butt to deal with. Going back to the experts, like make sure you've got some phenomenal people in accounting or have an amazing CPA or accountant or whatever that you're contracting with.
We have both.
Whatever.
We have an accounting team, literally a team. We have our CFO, but then we also have CPAs and third-party accounting because even though we do everything, they have to pass everything off, everything. And then we have legal to make sure that there's all these separations and that we're protected, our investors are protected, everything else. So they're like the amount that we pay simply to make sure things are done right is wild.
It's
actually.
unbelievable.
It's unbelievable.
I mean, there's been times I actually have to dive into the financials because I'm like, there's no way. But no, it's way. It's for sure. But yeah, we've got those pieces. And then operationally speaking, I mean, we've got the revenue management and marketing that's managing all the revenue at the asset level, at the facilities, on the back end, through the softwares, doing the rate increase schedules and the notices and all those things. You got the administrative piece of the operations where you have the tenant coordination and communication, where you're sending notices, whether it's evictions or terminations or it's towing notices, whatever's going on. You've got the repairs and maintenance aspect as well. So you've got somebody that's managing the asset. If you've got all the things, right? You've got asphalt, you've got buildings, bollards. People are running into gates all the time. I don't know. There's got to be a sign somewhere that says "Hit me on the gates." I don't know.
They love it. People love it. Favorite pastime of your tenants is to run into gates and buildings.
Yeah, so you've got those things, and then you've got IT as well. IT is another really important piece because especially as we're I think we talked about adapting or dying recently on some of the investor updates we were looking at and doing for everybody, because that's a lot of like what we're doing, right? We're implementing a lot of new technology and continuing to invest more and more in technology as we have throughout, the past 15 years that you guys have been doing this.
We have asset management.
Yeah, asset management's another big piece.
Investor communications.
Yeah, portfolio management now. We're really starting to build all of these things out and have been over the past several years to just build a foundation.
Acquisitions.
Yeah, acquisitions, another huge piece. We've got the architectural development.
We've got architecture, development.
Yep.
We've got construction management. All right. Now, that's a lot. There's somebody listening maybe going, holy crap, which, yes, we agree. It's a lot.
Yep,
A lot of
that's
people.
no joke,
but,
man.
It didn't start like that. So let me roll back here.
Yeah, just 6 years ago, what did it look like?
Yeah, crazy. And if you go back
crazy.
20 years ago, this was our entire team. It was the 3 partners.
Yeah.
And then we hired one administrative person. Okay. So this is the evolution. At the start, me, Sam, and my father, when we started the company, did everything. We wore every single hat. We had 3 facilities. We just, we were buying and we bought 3 small facilities. And we're like, we're drowning. We hired an admin person to come in, help with literally notices, mail, right? All that kind of stuff. And then from there, it kept growing. All of a sudden, I'm too busy. This hat needs to get taken off. And it's so much, it's an entire role. And then we hire something. And then it goes like that. And that the individual functionalities of business that is needed and needed expertise become departments like we just mentioned. But starting out, the revenue management, the finance, like literally the debt, the accounting, and frankly, the legal working. Now we worked with outside people. We didn't think we were attorneys, but that was all, all of it. And 2, and some more stuff, but that was all under Sam. So all those departments that we mentioned prior were under him.
He was like the integrator, right? So to speak,
yes,
of like
he was the
all
integrator.
The things.
Exactly.
Right? Yeah.
And then the acquisitions, right? And he did the underwriting. So that was a collective effort, but like I did the focused acquisitions and operations. So looking at working with brokers, everything else, who are we getting? And then going out and finding that facility, what's it worth, doing the negotiations, what can we buy it for? And then the marketing and like all of those functionalities were really under me. And those were the 2 main functionalities that we're doing. Obviously, my dad helped with both of us, and he was working a lot on the acquisition side with me because we were buying a lot. But it was quickly we were going, oh, too much. We need help. Operations of the actual facilities. And you figure it out because one starts lacking. And then from there, we just hired underneath as we tried to grow. And it's a balancing act of, do we have the revenue? We need this person. I can't pay for it. What are we going to do to pay for it? Pay for him, get him in. Once we get that person in, that allows us to grow more. And so it's just this evolution that ends up becoming independent departments with department heads, high-level people, employees under them of all these functionalities that start out small. Once again, this is the business of storage we're talking about. The storage facilities themselves, they have their own managers, their part-times. We had operations. We had you have technologies, you have processes, system. Oh, Sam, that was another thing Sam did. That was the technology. But you had all of that stuff on the ground that we were then managing and administering. But it wasn't overnight that it became to what we're describing as all the departments, everything, because you may think that's overwhelming. We did it all, but everything was farmed out. And then we did all the work. We were traveling. We were on site. I was doing lock checks. We were, right. It was all of it. We were doing everything.
Dude, even just 6 years ago when I first started working with you guys, man, it was in the first couple of months I started working with you guys. Like we did a road trip and went around to a bunch of our facilities here in the Pacific Northwest. 100%. And you were like sitting there meeting, having like annual reviews with employees.
Yes.
I mean, even at that level,
even
at that point
level
in time,
yep.
having, 10, 11 facilities.
Yep. Big facilities.
Yeah. I mean, that was no joke at that point in time. And you were still that integrated in those things. And it made me think too, because I think there's a lot of people out there that question, do you hire in anticipation of growth and go and hire a certain person without that immediate need right now? Do you plan ahead when you hire? Or have you found, AJ, it's best practice to go through these growing pains to then help identify and provide a roadmap for you to, like, best practice?
Yeah. It's a balance between. One of the problems with pre-hiring is, first of all, I see this a lot where people hire people and then they fail. And so people are like, I can't hire people because it takes more work. It costs me money. I'd be better off without them. Generally, what's happening is you do not have a process or a system for that person. So you hire somebody and you just tell them, go do it. And then they're not doing it the way you want or the way you think it should be done, even though they don't know. So of course they're going to fail. That's not their fault. It's yours, right? So one of the aspects of hiring is identifying the need in an area that will grow, but then also you need to build out a system for a person to come in to follow. The growth is what you add on to it. So generally they come on, you have a system. They're usually trying to make that system better, perfect it. They can put all their time and attention to it, right? And they're learning it and you're helping them. And as you're growing, they're getting more and more work. And then that's how it grows. If you hire somebody and you say, we're going to just grow and we're going to do stuff, that is a creator position. Very different. That is like, we're hiring you to build out a part of our business, right? If you do that, you need to make sure you have the funds, you have the knowledge that you can go, you can execute, and you're going to give them the resources. That's a very different type of employee though, right? It's not the same thing. So if you're hiring in anticipation or you're hiring to create, very, very different type of person. If you're hiring because of growth and demand that will be needed because of workload, first recognize it. Let's say, for an example, you are doing the marketing at your facility and it's taking all of this time from you. You're like, I need to hire someone because we're going to go buy another facility and I can't do it if we have another one. Identify what are all of the things that I do that go into the outcome? What are all the things that I wish we could do and how does it need to be better? And then build out that system.
Well, and how much more value could you bring if you weren't focused
doing that, right?
here?
So you can go do other things. Then when you hire that person, they're coming in and you're hiring them based upon, I need somebody to do all of these things that get the outcome, but I also need it to be better. So I want somebody that has skills in it, that has the ability to see what I was doing not good, make it better, but then I need them to add to it. Here's also the other things with marketing's one. We need to do more SEO, right? We need to do more targeted ad spend and identify where today I'm trying to literally manage ad spend, conversions, what our sales process looks like, right? Where I need all this other stuff. So they come in and you have it built out. Then they go, okay, here's how we can do this better. They work on the system, build it out, and then you're buying new facilities. Their workload is growing. So it may be an easy job when they start because they don't have a huge amount of workload, but they can work then on using their expertise to make it better as you're then moving workload onto them. Then you immediately go buy another facility. They're like, okay, I'm getting busy. Now you go buy two more and they're like, okay, wow, this is really busy now, but I've been working on the system and now they do it better than you did at your original, let's say 2 facilities. They're already doing that better than you did, but now they can do it with 4 facilities, 5 facilities, 6 facilities where you could hardly even do it with 2 and you weren't even doing a good job. So you are increasing the volume, but you're also increasing the quality at the same time. But you've created a framework for that person to come in. I see a lot of people come in and I'm hiring an admin person. What does that admin person do? Oh, geez, we have a lot of stuff. I mean, can you make sure that person knows everything that they need to get done? Make sure our marketing's doing good. And also, I want you to communicate with investors. And they're like, okay, what's your business?
Yeah.
Like, what are we doing here? And how do I need to do it? And then all of a sudden, 3 months later, they're like, you're doing a horrible job. Why can't you make these things work good? Why aren't you just getting it done? And you're like, you didn't give them a framework. They don't know what they're supposed to do, how to do it. You set them up for failure. So not only can they not take on more, they couldn't execute what you had. That is not their job. You're hiring them to do the functionality, but you don't provide the actual job framework for them to do it. They should be there to make it better, to scale it, but they need the parameters. If not, if you hire somebody and say, I don't even know, we need to make it into something, that's fine. But that needs to be the upfront conversation.
And they're going to be a really high level person.
They're going to be a high level employee. This is a creator.
Yeah.
This is a builder. So you're coming in and saying, I literally want you to build out this division. I don't even know really how I'm growing. I need your help. That is lowest manager, but that's more executive type levels, right? That's usually when people starting out hire partners, or not hire, but they get partners to come in, or they hire executives if they're already at that stage. Most people, they don't have the money to hire executives. They don't have even the ability to. So then it's just, I need help. I can't even do this business if I don't have it. I'm going to get a partner that has different skill sets, and then we can work and then hire executives to create and build from there. That's generally how those things happen.
Man, I love it. And this is kind of a testament to that. It crossed my mind as you were talking about this. And it's funny, I've been actually thinking about this week even, is I hear a lot of times, and I get the understanding why people do this, but you hear a lot of times where like people will do kind of like the self-deprecating, like, well, if they're like investors or entrepreneurs are like, man, I'm an idiot. I can do it. Anybody can do it. X, Y, and Z. And I was thinking about it and I'm like, yeah, granted, I agree with that. Most everybody out there with a, brain between their ears, I mean, they can go out and they can learn these things and become investors and become business owners and entrepreneurs and build amazing things. But that's the thing, like the key piece that I just said there was learn. And when you guys were, first starting out and you're wearing all these hats, like you have to go and learn and be dangerous enough to understand. It's not that you have to be able to have the conversations and ask the questions to the attorney, to the accountant, you have to be able to even have the conversations.
If you don't know anything and you hire somebody to go, that's going to be disastrous.
Yeah.
Like, and what you said, you need to know enough to be dangerous. The amount of time that I spend as an entrepreneur studying is hard to describe.
Yeah. I mean, all the time.
All the time.
Yeah.
It is hours a day that I have defined time that I am studying. I write research papers on my own just because I'm learning. And I've done this for a long time. I have files
That's a great way to do it,
of things that I'm just like, I need data, I need to learn everything else because I need to learn. And I served a mission for my church, and we actually, one of the great things about it was every day we had a set time where we were supposed to study 3 hours. And I just kind of carried that forward. But when I got in, I'm like, I don't know. And there's no answers. Like, because nobody's doing it. Like, as in you're creating something. Well, the exact answers on how to create that is going to be dependent on what you're doing, who you're doing it with, the resources you have. There isn't an exact answer. Yeah. So you have to learn and then allocate, fail, get better. And you have to manage, though, that failure and what you're doing. That's okay. It's okay to be uncomfortable. It's okay to grow. That's part of building a business. It's not okay, though, like you said, to say, oh, I don't know. You just hire somebody. You just do it.
You're like, oh, I can be an idiot. Like, oh, cool, whatever. I'm not going to worry. I'll just go, hire that person.
You got to figure it out.
Do that. Yeah.
You don't need to be an expert, and I'm not. And that's why I said at the beginning, as CEO of my companies, my job is to make sure that I have people that are much smarter than me doing all of these functionalities of the business. Now, I think that anyone that's with me or been in a meeting would never say that if I walk into a meeting and I'm working with those people, it's not that I don't have not only knowledge of it, but that I'm not pushing back, that I'm not challenging, that I'm not saying, hold on, well, what if we did this way? And and I'm actually challenging and bringing value to that because I see all the pieces, everything else like that, and we're doing it. That's not it. It's not blind, right? But the actual execution of that thing, no. Like, no, I can't. I'm not as good, and I don't know as much. That's fine. That's not a problem. But what you can't do is just be hands up. Well, I don't know. He takes care of that. The moment I hear a leader, somebody just like me, oh, I don't know. And like, I joke around all the time, like, oh, I don't know what anybody does. I don't know that. But once again, I'm also, though, like literally there's levels of the business where I don't know, but that's because I have another level that does know, and I talk with them. So there is obviously a point where you don't know at certain levels, but it's not because you're not their boss. You're not even integrated with them.
Yeah.
You have somebody else that you're going, and I absolutely know them. And two, I know what every functionality of the business is.
Exactly.
So I may not exactly know, but I know. You can put me in a facility, and I can run that facility. In fact, I can go meet with all the customers. I can work with them. There's nothing that I can't do, right? I'm going to have a learning curve probably on some of the different things, right? Because I haven't done it right. But as a leader, you can't disconnect yourself from your business or the process that it's made. Like before we got into this, we had a meeting with VAT, right? And I'm in there and we're going over and I'm like, okay, well, here's guys, some of the things that I want done. Here's how I want to manage it, everything else. The experts in their individual things, we work together, we collaborate. I'm bringing value, knowledge, and I'm trying to figure out answers. My job is to solve problems, remove roadblocks for executives, create solutions, right? And find opportunity. And so I'm here to try to make sure that everybody can move forward. We can see opportunity. I can guide the team. We can go in the direction, and I'm making their jobs easier and I'm giving them what they need to do it. I can't do that though if I don't know what they're doing. And two, if I don't really have a knowledge of it. So you really do, when you're hiring people, the biggest mistake is just go do it. Just make it work, right? You're setting that person up for failure, first of all. That's not fair to them, right? It's just not. And two, everything that I'm saying, by the way, I know because I've messed up. I've screwed it up. I've done it the wrong way.
Yeah.
It's not because like I knew this or anything else. So I'm speaking from pain points where I'm like, oh man, I did this. And I know my employees that failed and it was because of me, right? Every time an employee fails, I'm like, all right, it's probably 50% us, maybe 50% them. There's very few times that I think employee totally failing is just because of them. I just don't like, there's ways we could be better. There's ways we could allocate, right?
For sure.
Now, there's employees that we absolutely need to get rid of. That's different, okay? But there's some employees that they failed because of me, like literally just outright. And I know that and I understand that. And I had to okay, I have to get better, okay? I have to be better at making sure they can be successful. And literally some of that was staying out of their way.
No, that's a big one, dude. That is a big one. Well, that's awesome, man. We've covered so much ground today. It's an amazing podcast. I want to remind everybody out there that if you fill out our online survey that is in the show notes right now, you guys can be entered into a drawing to win a book signed by the one and only.
That's right.
AJ Osborne. Survey, it just goes through what you guys want to hear. So it literally is as easy as just going through this thing and saying, hey, I want to hear more about this and more about that. And obviously, we like to curate the content to whatever it is that you want. So let us know what you want to hear. Go to that survey. Get entered into win this awesome, book here. We're going to be doing that drawing. So go do that right now
And help us out, provide value to you guys.
100%.
We appreciate it, everybody.
Thanks, guys.